Hello and welcome to the weekly outlook. Next week it really is it's all about the pound, but we have got the cash rate and trade balance and RBA rate statement due out for the Australian dollar as well. So we'll have a quick look at the Aussie, and we'll see how we're doing on that. Now let's just get rid of some of these quite a few lines here we could probably do without now. They've sort of all been and gone on the analysis, so we'll get rid of some of that stuff so we can just make the chart a little bit clearer. We can see what's going on. Okay, so what we've basically got is we've had slowdown in growth in China, which is obviously with Australia being the biggest export partner for China, then it is going to affect the Aussie. Now we had the non-farm payroll which came out much weaker than expected, with only 142,000 jobs created for the non-farm payroll, and the average hourly earnings dropped right back down to 0.0%. So it was quite a poor reading for the non-farm payrolls. But the Aussie dollar didn't really, it kind of failed to rally much further than anywhere it had already been in that trading range of the day. So I think we're still going to be looking to sell the Aussie. At the moment, analysts aren't really pricing in, or the market's not pricing in, and analysts aren't expecting the RBA to cut rates. However, they could surprise us with this slowdown in China, which is affecting GDP and export. So it could be worth looking at that. And overall, the Aussie dollar is still very much a weaker currency compared to the US dollar, so we could still sell on the rallies. It might be that we just get a bigger rally before we get the opportunity to sell. So the RBA rate statement, if they keep rates on hold, and with that, coupled with that bad non-farm payroll we had last week, I think we'll probably see these highs retested around about the 7.2 area, maybe 7.250, and then before it sells off again. So we could even look to take buys on the breakthrough of the 7.085 level, which is this swing high on the 4 hour. Okay, so that's the RBA. The other currency pair that I'm really interested in, or the currency in fact, is the pound. Now the COT report, the COT report, the commitment of traders on the futures market, is showing an increase in long positions and a decrease in short positions on the pound for the first time in quite some time. So we're showing that the sentiment is changing. Now, obviously, we had the pull on farm payroll and the pound started to rally slightly, but it has pulled back from that rally price. Now, going into next week, we've got the services PMI, which is probably the most important PMI out of all of the PMIs that come out next week. So it'll be interesting to see if that one manages to make a gain. The other PMIs have failed so far, manufacturing and construction. So this one really is quite important on Monday. And then we go through later on in the week to manufacturing production, and then obviously the MPC official bank rate votes, where the MPC members will vote on to raise all rate hikes. The last one came in at 108, so one member voting for a rate hike and 8 members voting to keep rates on hold. So if that changes, it will cause a rally on the pound. We've also got the monetary policy summary and the official bank rate vote not expected to change. And personally, I don't think bank rate, well, it's fairly certain that the bank rate won't change on this occasion. So we're going to be looking at all that data coming out and seeing if that's going to give us anything hawkish to go on for the pound to rally. We are getting quite low now, and like I say, that sentiment is changing. I was looking for a rally from 15000, but we haven't made it down there this week, and it has turned around with that weak non-farm payroll. This really could be the catalyst for the beginning of the rally. So we've got to keep a close eye on that and see how that forms through the week next week. But overall, going to be looking to go long on the pound after that non-farm payroll report last week. On Friday, we've got Canadian dollar, we've got the unemployment rate as well. Now that was at 7% last time. If that drops down, we could be in for a continuation of the drop that we're seeing at the moment in the US dollar CAD, basically formed from that non-farm payroll figure, which came in much weaker. I would expect this now to probably drop much further. However, it is oversold at the moment. You can see that it's way down below the 30 zone in the RSI. So just be a little bit cautious of that, and we are banging up now on a previous area of breakout. So it could be the end of the rally. We're going to wait till Monday morning, see how things look. But I think We may see a little bit more downside, maybe back down to the 1.3 area, and then possibly look to rebuy that depending on how the tone coming from the Fed is after this non-farm payroll. Okay, so only really the pound and the Aussie dollar going to be looking to trade next week. We can look at the cross currencies. The pound Japanese yen is a very, very good one at the moment. Very low in terms of where it's been in the past. 181.95. It's had a big drop. If we take this down to the 4-hour chart, or up to the 4-hour chart, you can see we've had quite a big drop from its rally up to 195 back in August. So we've had a huge drop down there. It's found support zone around here at the moment. This is, in my opinion, is just waiting for that good news for this pound yen to really start that rally. Don't forget, the Japanese yen is looking like they're going to be adding stimulus in October as well, so there's going to be a divergence between the two central banks there. Okay, that's all for this week. Thanks for watching, and I hope you can make some pips.